Thanks so much for joining us here on a Monday. I'm Marlon Bowling with you on your Market Day Report. We're going to go right to the trading floor in Chicago and find out what's going on driving our grain market activity with none other than Mr. Oliver Sloup of RFD. Oliver, good to visit with you as we start out a new trading week here. Everything seems to be fairly quiet here in the early going so far.
Yeah, a little quiet. See some pressure in the grain markets, which is kind of a little bit of a surprise to me, but nonetheless, you got to play the market as it lies. So for the corn contract, we're looking at coming into some key support levels, and we're paying a lot of attention to technicals this week because we're not expecting a whole lot of new news to hit the wires ahead of next week's USDA report that'll be out on Thursday. So some of the technicals we're looking at for that May corn contract, 366.25 to 369. That's the 150-day moving average. If we're able to hold price action above this, I think that favors the bull camp. But ultimately, the bulls and producers in this market want to see a close back above 372.5 to 375.5. That resistance pocket represents the 200 and the 20-day moving average. So it's kind of in the middle of no man's land, but the bulls really want to see some more work put in here before the close.
Oliver, what do you see for the commitment of traders on positioning for the corn and soybeans and wheat right now?
You know, there wasn't a whole lot of changes in Friday's commitment to traders report, which I think a lot of people were expecting to see bigger changes. I think some of that was due to option expiration last week, and I think some of that has actually carried over into more pressure here to start the week. So, I mean, the commitment of traders has to be taken with a grain of salt because that data is collected through Tuesday, so it doesn't account for Wednesday, Thursday, or Friday's trade.
All right, now we had the export sales numbers that came out Friday last week instead of on Thursday. That was because last Monday was a holiday. But the soybean exports were relatively weak. I think a lot of folks expected that, but it was kind of surprising to see the soybean meal exports as high as they were at 230,000 tons.
Yeah, definitely. The soybean meal was the kind of the big surprise. Soybeans a little bit weaker than expected. But again, looking at some of these fundamental numbers that we get on a weekly basis, it's not one number that specifically is going to jump out on to us. It's going to be forming a trend. So if the soybeans can stabilize and produce good exports over the longer term picture, I think that should offer good support to the market. As I had mentioned, you know, we're really just kind of sitting on our hands until next week's USDA report, barring any major fundamental changes with regards to supply and demand either here or weather in South America.
All right, so I want to take a look at our current futures trade, get everybody updated here on what the prices are doing. Let's start with this corn market. You were just talking about the corn. The May contract is 1 3/4 lower right now. We're at 369, just ½ cent from the low of the day. New crop December corn down 1 1/4 right now at 389 3/4 per bushel. On that soybean trade, we have the May contract currently down 2 3/4 cents at 1021.5 per bushel. It had been as high as 1029 1/4 overnight, so it's off of its high now by about 8 cents. We have September down 2 3/4 now at 1016 1/4. That happens to be on the low of the opening range here this morning. Moving to the wheat trade in Chicago wheat, we have the May contract down 6 3/4 at 441 1/4, and even that has bounced 3 cents off of its earlier low. So a lot of pressure in the wheat trade. July down 6 1/4. Kansas City wheat on the May contract is now trading 8 3/4 lower at 458 1/4. July down 8 1/4. Spring wheat trade in Minneapolis, we have the May contract down 5 at 548 3/4. July down 4 3/4 cents. And the cotton market, we currently have May up 34, July 35 points higher at 77.85. December up 8 points. That's a look at our crops, and we'll come back and talk with Oliver Sloup about our livestock trade when we come back after this. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling with you. We're talking right now with Oliver Sloup of RFD. He's located at the edge of the trading floor there in Chicago. And Oliver, thanks for joining us. I want to shift our attention now to the livestock side of the equation here. Friday was not necessarily a pretty day when it came to the producers' outlook on the cattle market. Had some big-time losses, especially in the feeder cattle market. We had the second contract actually losing like $3.95 on the close and settlement on Friday afternoon. Now, today we're rebounding. Let's take a look at our prices. Feeder cattle right now have March $2.18 higher at $123.88. And the April feeder is now up $1.95 at $123.50. May feeders are now $2.04 higher at 123.12. So very strong gains, but they're only gaining back about 2/3 of what they lost on Friday. Keep that in mind. On the live cattle side, here we have the April contract 97 higher now at 115.92 per hundredweight. That happens to be on the high of the day, and we have June up $1.23 at 106.08 per hundredweight. That's also on the high of the opening ranges here today. Oliver, your take on what you're seeing develop here in this cattle market today, given the fact that we had that crash on Friday in the futures market and a sharply higher wholesale trade, and then we had the cattle on feed numbers that seem to be a surprise to no one.
Yeah, kind of a lot to take in. We did have that big sell-off on Friday, and I think a lot of the pressure in the cattle market on Friday was probably, some producers stepping in, taking some risk off the table into that cattle on feed report, because the last one we saw was overwhelmingly bearish with the massive placements number. This last week's report ultimately was very neutral in our minds, and so we're seeing some of those buyers step back into the market for the April live cattle contract. We look to be fairly friendly here, but for the most part, I think it's kind of in a no man's land between 115 and 120. I think if you really want to be a buyer in the live cattle market, you might look to the June contract that's trading at a pretty nice discount to the April futures.
Yeah, I was just going to point that out. If you look at, February right now, which is going to be expiring tomorrow, but it's at 124.75. It's pretty close to where the cash trade was last week. It ended up at 124 to 125 in the plains. But August, for example, 101.58. So there's like a $23 disparity there between the February and the August contract. And a lot of traders were wondering openly about that before that cattle on feed report came out, if that means something to the trade before those numbers really did get revealed Friday. What did you think about that?
Yeah, we've been just kind of playing it very cautiously. Right now, we've got some clients that are short April and long June, and we're going to kind of continue to play that spread, looking for it to narrow a little bit going forward. But again, the market can be irrational sometimes, and those spreads seem abnormally wide, but that doesn't mean they can't get any wider. So, risk management is going to be key, and that's why we're spreading it with some different months.
Okay, and then we had the hog market taking a big turnaround on Friday after selling off for a few days. It rallied sharply Friday, and now today it's just kind of treading water here. April lean hogs up 40 cents at 68.42 on the day. May up 14 at 74.12. June is down 12 at 77.70 per hundredweight. So your thoughts on this lean hog market technically? Where are we now?
Well, we did a lot of technical damage last week on some big sell-off days. So 65 held is pretty good support at the 200-day moving average. First technical resistance for the April contract doesn't come in until about 70. At that point, with the technical damage we saw last week, I think that'd be an opportunity to sell on the first test, meaning the first time we test that 70 level. If we fail to break out, I think you have a good trade to the downside, looking for a retest of that 200-day moving average near 65. With that said, if we do break out above that, you're going to want to have some stops in or some way to protect yourself in case we do go up and test those recent highs that we saw over the past month.
All right, thanks, Oliver. Oliver Sloup of II Trader in Chicago. And Janet, there you have it. Hogs kind of either side of unchanged right now. Cattle market firming up, though.
All right, thank you very much, Marlon.